On daily time frame, we'll see that the structure of the market has already played its role, and we can see here on daily time frame resistance structure formed a W structure, an intended bullish price action. Price came back, respected the neckline, and have bought and broke the structure, used here as a resistance structure, broke the structure, and picked a bearish impulse from here, and you see price return back, and we are now officially in sell messy. You can see what price have done there. We're officially now in a sell messy. That is what it is after the break of structure. So the next thing to do now is where are we likely to have a possible support on daily time frame if you are trading daily candle. This is what has happened. The breakout of this structure happened, and put your vertical line here. We broke out from here on officially by Thursday 23rd, and you can see that after that market just picked liquidity and continued to drop from the structure. So we are looking at a possible opportunity on daily time frame. Now we are marching into London section, and the market is open, and we'll see what 27 did. 27 was a sell like no other, and it is what it is. Price go back to retest the broken structure, and we have seen sell initiated from there. So all the market did was to seek for liquidity on 27, but the intention is sell, and 28 was a confirmed sell structure. So on daily time frame, where I see a potential strong support is going to be somewhere around here. I see a strong support somewhere around here, 3,999. Yeah, if you stay here, that's still okay. Here is a broken resistance structure on daily time frame. You could have a reaction at 415. But if you are looking at to buy, this is where you have your buy candle. You buy where others are buying. This is where market bought. So if you are looking at that one, 4006 is where market bought. And you see that structure there. After price peak, liquidity broke. We played again, returned back, and respected these two structures. So this is technically a, a buy spot on daily time frame, leaving us with the probability of gold falling another 400 points from where it is. But we're going to follow it case by case, no assumption until we get to the root of the matter. So the range at which market is expected to buy today, this is the range. This is the buy range. So anything from 4006 to 4000 is a potential buy floor. Yes. But I'm going to do something very, very technical on lower time frame, 1 hour. So we're going to follow it case by case. So for every break of structure, we look out for a potential accompanying opportunity to sell. And the Federal Open Market Committee, FOMC, a top brass monetary body organ in the United States, will be having meeting July 28, 29, and today is day one. The interest rate decision and statement will be released Wednesday, followed by Chairman Kevin Walsh press conference at approximately 2:30 p.m. ET time. So it's expected that market will watch, and there's a broader consensus for hold on the current interest rate at 3.5, 3.75, which has been normal target range. So the possibility for hawkish descent still persists, and the market is pricing a higher chance that a hike might come later on, but most likely due to geopolitical tension between Iran, United States, and Israel. There's a very high probability that rate might remain the same. So we look at key decisions if rates remain the same. Most likely, if rates remain the same, the market might really not react, but most likely gold might pick impulse and continue to rally. Then we see the dollar index. Most likely, they might move in the same direction. Then if we have a rate hold and a dovish commentary from the head of Federal Reserve, we are likely going to see gold supported. The dollar index for US 10-year Treasury bond will fall. And if we have a hold and a hawkish comment, you see that the dollar index will rise and gold will fall. So this is what we have, and we've been looking at what's going on from China, and it's been very interesting. The Industrial Commercial Bank of China, the world largest bank by asset, has been active on two fronts, expanding broader RMB settlement in yen. In all everything about China banks, they are really increasing their payment infrastructure, and it's something to watch. And they have ended paper leverage trading from its Shanghai Gold Exchange effective July 24. So these are fundamentals that we see that will most likely help if the Federal Reserve hold rate the same to help gold upswinging. So at the moment, this is where I see a potential support for now. And on daily, you can see that the daily candle is still very much fresh. It's still very much fresh at 4,050. There is a support at 4,050, but the market opened on a bearish note after price being rejected at 4,115 yesterday during I think that was during Asian session. We had that rejection. So Asians rejected yesterday 4,115, and today candle is showing a bearish and 4,440 was anticipated a buy floor, but I'm seeing what's going on. A lower time frame will have an accompanying structure giving us a buy. But I think technically the market will continue to pull down, and where we see a potential relief might be somewhere around 4018. There is a relief at 4018 here. There is a relief at this level here, 4018, 4020, which was a 4020 area we bought before. So there might be a relief at this level. There might really be a relief here. The real figure is here. This is the real figure, 4018. So market might come in into 4018, 4017 and react. Yes, that is likely the case. But on a lower time frame, we are having a demand floor on a lower time frame. The demand floor we are seeing there is 4040. 4040, a um previous broken resistance structure, turn demand once tested, and price is back there to confirm it. So we don't know if it's going to hold. Then another structure that everyone needs to be wary of is there is a cross here on daily time frame. This cross is a daily cross and also gives you an insight of what to expect. Here is a support structure, here is a resistance structure, breakout of structure, retest 1, retest 2. And the next retest is showing us somewhere if price comes here, it might pick liquidity. It might decide to pick liquidity at 4,020, 4,020, 23, 24, 25, 26, 27, and you might see a reversal. So that's what the daily is given. So let's look at the 4-hour chart. So on the 4-hour chart, most likely we are going to take these things off, and our preferred gauge is 4 hours. So on 4 hours, we look at the structure of the market after price has formed a, a reversal price action. This is a clean head and shoulder. At the break of the neckline, price came back 4115 and dropped. Look at that price action, a bearish price action. And we have seen it every time we see it, the result is the same. Came, retest the neckline, and it's off, and that was what price did there. So when it came back, it tested that neckline, and it quickly sold off. So the next thing to do now is to see what price is up to on a lower time frame. So we are checking on a lower time frame. We have a key support area here. We have already dealt with 1115, and we have seen how price managed to. Now you see there's a break of structure at 52. So most likely market is not going to take it lightly. So it means that a retest into 52 is a bearish continuation. That bearish continuation will stop us at this level where we see a potential break at 2217, which I earlier said from a daily time frame interpretation of the chart. So it's likely that 2217 will be a trigger with a very strong, which correlates with what we have on daily time frame. So let's see if as market goes to retest 52, it starts to drop from there. Here what happened is that previously we have here as a demand floor, we have here as a demand floor, and market has respected. In fact, for the fact that market picked the impulse here, this is the strength of structure, SS. My strength of structure came from here at 52. So when price returned, did a lot of play around, it returned there and respected it and used it to challenge the neckline of the head and shoulder reversal price action. And now we see that yesterday bearish candle broke that structure 52. A broken demand floor becomes a supply roof. Demand floor 1, demand floor 2, one supply roof. So the strength of the structure hinge on three key market reactions. So we have one as a demand floor, we have here as a supply roof, and we have here as another demand floor. So on technical, it's still bearish continuation at 4052.96. So we expect that the market should pull here and return back into 4020, 4017, 4015. Technically, that's what I expect the market to do. Here seems to hold a very strong bias for the market. And if you want to judge the market from where the market start buying, the market start buying from here. This is where it picks its impulse. So you want the market to return into 3969, 3969. If you really want to be safe, if you don't want to be burnt, if price breaks out from here, most likely there will be a return into where it picks liquidity. And honestly, I would like it to come down here, or you just wait exactly here and let's get the date right. If you wait on June 29th low, most likely this could be a new trigger in price. But at the moment, we're on a bearish course after what price has done. And if you look at the structure from a broader context, you will see that here we have a very clear market breakout from here. This is a 4 hours strength of structure. There's a 4 hour strength of structure here, and after price breakout from there on 4 hours, you have seen a retest and a bearish continuation. The candle that broke the camel back was at 10 during London session. They broke the structure, then New York came back, saw it, retested it, and continued. The strength of that structure came from here. If you switch on your line chart, you will see the strength of structure came from here. So the price did not play with it, and you can see after that break of structure, then 4094 became a retest, and it's a push. And we can see what happened again. Asian session team up with the Sydney, they broke a key critical demand floor 4052.96, setting up a bearish continuation. My aim is to see 4022 trigger, 4017 trigger. If that fails, which I think is very unlikely due to the price action here, we have here as a support structure, breakout of structure, price returns here as a supply roof, break of structure, retest one as a demand floor after a series of interplay. If price returns here, there's a very high probability that here we'll have a trigger. Very high probability. That's what I see. So let's see if 4040, we have already taken profit on 4040, and we took a 90p profit on that to graze, to match into London section. But I think, however, everything is you can't say one thing and just stick to it and expect it to happen. If price breaks 4052 on 4 hours time frame, honestly, that will be an invalidation of bearish bias. So you set course for buy. Yes, look at the structure. So if price manage to break that structure, then you change your mind and go for buy. It tells you something that they already know the outcome of the FOMC meeting. That's what it tells you. So if we have a 4 hours break from here, change your mind and go for buy. And ahead of the FOMC and the FOMC release and um, statement from the head of the Federal Reserve, Kevin Walsh, we expect that some volatility will follow. And at this level, I see a price action on a descending trend line acting as dynamic support. So most likely price will have a trigger in this zone, and I'm watching it keenly. So, but there is a very high probability that rate might remain the same due to inflation concern. There's a very high probability that rate might remain the same. If that be the case, then we'll see that market may want to draw liquidity for uptick. So if we are looking for that case scenario, we'd like to pay attention to the price action in June 10, where we had a weak rejection, an institutional rejection followed by a massive buy. And do not forget that the commitment of trade for commercials net are short. And on a weekly time frame, we are seeing some changes which we're also observing it. So if price, whichever way it goes, this becomes my new um, demand floor based on institutional buying. You can see commercial presence there. Every time price hits on that level, it's married by a very strong buy candle. And if price pulls into that structure ahead of the FOMC, I expect that we'll have a push from 3,800 whole number, 3,800, 3,800. Price should rally back. You can set your buy order there. This is not a financial advice. This is just an explanation of market structure. Will it flip? There's a very high probability that market flips whatever you have said. The probability is high. So this is what I see, and I do hope that it remains that way. There is a very strong 4 hours cap here. That strong 4 hours cap, market has kept it on 4 hours close. You can see there's a very strong descending trend line on 4 hours close. And I do like to see in the future it broken to mark an era of bullish awakening. So a breakout from this structure, like you can see it on 4 hours, the way it's leaning, every time price touch it is a bearish drop. This is a clean 4 hours close. It will serve as a buy continuation or a buy confirmation, whichever way you want to see it. The breakout from this structure will lead to buy. And to put into context, you see that price has reacted here. We have here a resistance structure. We have here a resistance structure. We have here a resistance structure. We have here a resistance structure on Wednesday, and a breakout from that structure will be a buy call. So ahead of FOMC, that's also another area to watch ahead of FOMC. So I'll be looking at it critically to see if price holds. Then the next thing we are supposed to do is to look on a lower time frame. On a lower time frame to follow the bias of the market layer by layer while we keep in touch with 4 hours sentiment. 4 hours have a stronger bias on intraday. So whatever 4 hours say, it's very close to daily interpretation. So ahead of FOMC, we see that market might come back into 4,153. And if it comes back into that zone, that will be an appreciated buy time. Yeah, at that level, if price comes here, break it, we wait for a retest. Once you retest it, you are going long. And if you go long, your target could most likely be around 4,300. That's an error. It tells you that smart money is in. So we cannot make this out. This is the structure of the market for now. So I'm watching to see how price break out 40, 52, a broken demand floor. So if price on 4 hours breaks that structure, then we are going to retest a buy. And that buy, we're going to test 4,100 and sell from there. Because on a daily time frame, there's also a break of structure on daily time frame. So if price goes back there, it's going back to retest yesterday breakout. So my aim is to see price come into liquidity. We want to see, since the COT, commitment of trade for gold, shows that institution commercials are short, long. I mean, majority are short. So if they sell based on the CUMIX, the commitment of trade data, then we are looking at a market reset somewhere around 3,800. Yeah, that makes a whole lot of sense to take away all these lows, to take all of them away. It makes a lot of sense. Remember the strategy? The strategy is to buy at the break of the previous low and sell at the break of the previous high. It makes a whole lot of sense. So that's what we'll see for now. That was a good win for Asian section, opening the market, marching into London section. We already secured a 90 pip win. So this is how we analyze the market. If you have a divergent view, come to the comment section. Let me know your grievances. If you agree with me, give me a thumbs up so we'll continue to, throw strong insight into the market. And let's win. Let's make this money together. Bye for now.